Good evening, everyone, and thank you so much for joining the webinar today. My name is Yogesh, and this webinar is brought to you by Century Financial. Century Financial is an investment consultancy, and we are based. Our headquarters in Dubai and Emaar Square. We have an office in Abu Dhabi as well. And today, the webinar which we are going to present is going to be about how you can plan your portfolios for the remaining half of 2024. And I welcome all of you in this webinar. And I see more people joining in. So we'll start this session. And while everybody joins, um, please understand if we are trying to record this webinar as well. So we'll try that the recording of the webinar is also uploaded on the YouTube, and we are able to send you the recordings as well. Once again, thank you so much for joining. While we do this session, let's try that if you have any questions or if you have any queries, let's try to use the chat options over here. I know that at this point of time, the sort of setup which we have, you can mostly chat and write your questions. But sooner, we are going to have sessions where we can connect all the people together and have more and more sessions where we can see each other, where we can be more interactive. We can do a lot of seminars where any sort of questions or problems you have, you can address, and we can meet live and connect. So anybody who's attending this webinar today will also be provided a one-on-one free consultation session, a one-on-one session with the consultants, a one-on-one session with me, and you can clear your doubts even further, even after the session is over. So thank you so much once again for giving Century, giving me the opportunity to today to present our facts and update you about the markets. To make sure that I answer all your questions, please try to use your chat options. If you can hear me properly, if you can see my presentation, just write a yes or a okay. Test your chat options if everything is working fine, so that if you have any more queries, you can keep writing while we are conducting this session, and I will try to answer as much as I can. So I think I have a few people already over here, and I think a lot of people are joining. So guys, just try to use your chat options if you can hear me properly, and if everything is okay, perfect. I think I've started getting responses from everyone. So I think most of you can use your chat options easily. Please, if you have any questions in mind, do discuss. Today we are going to go through an understanding of what the markets are looking like. We are also going to go through a live platform, and if the time allows us, we can see that in the last few days how majority of the products have performed, what is happening, what is the next 4 or 5 months look like. We are already in July, so looking at almost July is over. We are looking at August, September, October, November, and December, another 5 to 6 months. And there are a lot of events going to happen. So the whole point of this session is we'll be able to understand that which sectors are getting better, which are the economies at the moment which could be a good idea to invest, what sort of strategies we can use, what events are happening. And we are going to talk about a few strategies, but please understand, this is for the information purpose. Um, Under no circumstances we are recommending you any trade. We are giving you information. If you like to execute anything in your life portfolios, please talk to your risk managers first or talk to our consultants, and we are able to provide you a free one-on-one consultation regarding your portfolios, regarding understanding the markets. And that is something what Century does very actively, and we have been doing this from last 30-35 years, right? So let's try to have a mutual share of information. And as I said, if you have any questions, please go forward and do type, and I'll try to answer as much as I can. Now, to summarize, in the mid-year, like the remaining 6 months, what are the factors which we'll be looking at? Because this is really important, right? It's been a few months that we have gone through this roller coaster of interest rates, geopolitical uncertainties. We have realized that there are a lot of companies which have already skyrocketed, Nvidia being one of them. AI has created a massive impact, but as the session progresses, I'll show you something which will be again, equally surprising that how the investor behavior quickly changes. And in last 2 or 3 days, how the smaller market value companies have gone up, but then again, markets have come down. So global market rally is expected to continue. AI impact again could be really massive. The higher rates which we see may not be permanent. US election is again going to be very significant, and the geopolitical risk is expected to continue. So, just to give you an idea, um, when we talk about inflation or what we are thinking about it, the global growth uh, in 2024 or by the end of it, it is expected to reach around 3%. Now, US is slowing down a bit, but we don't see a recession. Euro as an area is on a recovery path. India continues to become more and more strong. China is again on a slowdown trajectory, but it is slightly controlled. Recently, they did rate cuts and they injected more cash in the economy. Inflation has again been more stickier than expected, but then it is expected that further we will see inflation coming down, and the central bank can reach their card targets by next year, somewhere around 2025. And this will really allow central banks to start this rate cut cycle, right? Because this is something which has been a matter of concern throughout. Uh, Increasing rates bring stock markets down, cutting the rates push stock markets higher. In case of US, when we are talking about increasing rates, we are talking about increasing lending rates, making loans more expensive, which makes credit borrowing more expensive and discourages investors to borrow more money, and thereby uh, reduce the consumer spending and bring prices down. Same goes for opposite. If we cut the interest rates, if central bank cut down the rates, it brings it increases the supply of dollars in the economy, because loans become more cheaper, people borrow more money, they consume more, they demand more, and the prices go up. So off lately, after 2022, the inflation has been coming down, and we have seen central bank talking about interest rates. If you see from an asset class perspective, as you can see, Nasdaq, S&P, since the beginning of the year, we have seen around 16 to 17% growth already in these asset classes. If you look UK market, if you look at Chinese market, if you look at all country funds, 10 to 11% growth has been achieved. Nasdaq alone has gone up by 18 to 20%. Japan has gone up by 16 to 70%. And if you see from a dollar index side, dollar itself has become much stronger. And I mean, in last 3 days, you have seen dollar yen falling down a lot. Today also, dollar yen has fallen down a lot. But before that, dollar um, became a lot more stronger. So today, if you see dollar yen, you will see dollar becoming coming much down. But in last few days, dollar has reached to new year highs against yen, and that was something which we saw. It was an upward trajectory in last few weeks, and we'll go through the live charts to understand this as well. So we have seen the magnificent seven: Alphabet, Tesla, Microsoft, Apple, Nvidia. They had shown a very stronger growth. In fact, Tesla has fallen down by 12% today after the earnings came out. Alphabet gave good earnings, but the stock is still down. But in the big since the beginning of the year, these stocks have shown a lot of positive growth. If we see the regional snapshots, how we see these countries, so I'm just giving you a very basic understanding at how the next few months are going to look like. And again, guys, as I said, if you have any specific questions about your portfolios, anything about your positions, or if you want to know in general any topic other than what I'm discussing, which is related to financial markets, please keep writing, and I'll try to include this in the session and try to make the best use of this. So when we see regionally how we see the markets in the coming next few months, so in case of US, it is expected that we are looking at a stronger recovery, but at the same time, we have to keep in mind that the progress will happen. Central banks are still going to be very careful in cutting the interest rates. At this point of time, if you see, in case of US markets, the traders are still seeing the odds of a Fed rate cut by September at 100%. And this is something, it's a very bold statement, because right now, at the moment as we speak, 8-10 days ago, the odds of Fed cutting the rate are almost 100%. I mean, you can say 90 to 95%, where most of the traders, they're expecting that there will be a rate cut of at least 25 basis points. And again, there are few odds that rates will be cut down half percentage points lower in September, but then 100% odds in the cutting of interest rates. And why it is expected? Because the consumer price index inflation, which was announced last week in June, it was down than usually expected. So, and the annual inflation rate is now 3%, and this is the lowest in 3 years. So that is something which is really important, because if inflation has come down lowest in 3 years, that should force central bank to cut rates in September. And this is something which is have been talked about recently. The Fed chairman, he gave a lot of hint on the belief that central banks is going to act by September. And they have clearly said that the central bank would not wait for inflation to get all the way to the 2% target, which is basically the target to cut rates. So they have said that it's not necessary that Fed is going to wait till 2%. And that is why there's a greater confidence that inflation will return to 2% level, but that should not stop the central banks to cut interest rates, right? So again, this is really important. Why? Because now they're again going to decide on 31st of July that what is going to happen in September, and then on September 18th there is going to be another meeting on interest rates, and that's where they are going to decide whether the rates are to be cut or not. So this is something which has been going on in the US. And currently, so there's a quick question over here: how does the Middle East market relate to these changes, or is it parallel to the US since the dollar is used a lot? So, guys, this is something which has been asked a lot of times, and we have noticed this, that a lot of times it happens that when rate cuts happen or rate increase happens, regarding rate cuts or rate increases, whenever it happens in US, we have always seen that the same impact happens in UAE also. And yes, one of the reason and very important reason is that the dollar and dirham is pegged. So when we look at from the Middle East market, there is a very complex relationship. I mean, uh, when we talk about dollar influence on UAE market, it is definitely undeniable. There are a lot of factors which differentiate UAE from a direct parallel with US, though, because when we see the Middle Eastern markets and when we talk about rate cuts, looking at the oil dependency, because there are many Middle Eastern economies, they are heavily reliant on oil revenues, which means the economic cycles often correlate with global oil prices more than with interest rate changes. Now, UAE is still pegged with dollar. So this means the monetary policies are very closely tied to the US policies, and that includes the interest rate changes. But see, the point is, it does not always result in the identical responses. Because if you see countries like UAE and Saudi Arabia, they're very actively diversifying their economies which are away from oil. So this gives them more flexibility in monetary policy, allows them to consider more factors, which is beyond oil prices or setting interest rates. And inflation is again very significant across the region. Um, Geopolitical factors is one of them, political instability, regional conflicts. All of this is definitely going to be a factor. But you're right, we have seen a lot of times that every single time if rate increases in US, the very next day we see the rate increase in UAE markets also. So yes, most likely, although I would still not say that it's the entire thing is parallel to the US, since the dollar is used a lot. But I would also I will try to bring this into the attention that at this point of time, Saudi and UAE both, they're trying to diversify and generate more business away from the oil revenue. So maybe now the monetary policies are tied up due to the currency pegging, especially in UAE and US. And most likely the impact of the monetary policy in US is going to have the same impact in UAE also. So if rates are cut down in US, most likely the rate cut will also happen in UAE. Is something what we have observed for some period of time. All right. Looking at the other economies, we are looking at UK. If you see the UK outlook, recently UK claimed that they have uh, achieved control over inflation, and they have already started uh, beginning to improve. And at this point of time, Bank of England is the only bank which has kind of achieved its target very close. Over the next year, they're expecting that they will achieve their inflation target. Now, in UK, rate cuts have already happened. We see pound more stronger as it was before this year, and the economy is also improving as we speak. If we compare Eurozone and UK has improved more than Europe. Europe is on the path of recovery. But if we talk about European Central Bank, so where we see Europe when it comes to rate cuts, we are looking at the September once again, and this has something which has been talked about the lot in July. The European Central Bank, they are very much data dependent. The September rate cut, as we see, is still very undecided. But when we see there are domestic price pressures still weighing on inflation. So there is still a lot of risk on the exports because there are a lot of tariffs which have been put on the exports. That's why the Europe has decided to keep the interest rates currently unchanged, and they will see the financial markets. They will see how the data comes across. And there currently the deposit rate is 3.75. They did reduce 0.25% in the June meeting, and now they are saying that they're not completely or pre-committed to it. They will see that if the data comes good, they will cut interest rates. If not, then if the inflation is expected to be higher, then they could keep the interest rate same. And there are again a lot of geopolitical tensions which might pose upside risk to the inflation. And that is the problem, because if energy prices go up, food prices go up, extreme climate events, Europe has gone through some really extreme climate events, and if that continues, we might see again a positive increase in inflation. Now when that happens, the rate cut may not be as obvious as it was seemed in June. So the next few months are going to be absolutely different for Europe as compared to the previous. This is very important to know because um, all those people who are here who have been invested into European stocks, you need to diversify into different areas as well. Because if geopolitical tensions go worse, and if there is a possibility that energy prices start going further higher, because geopolitical risk is very high and it's rising. You talk about Ukraine, Russia, ongoing conflict. There's no ceasefire in sight as we speak. There are sanctions, there are export controls, there are tariffs, there are trade wars, and it's only intensifying. You look at Israel and Palestine, there's a higher risk of escalation. Military conflict is still expected to stay local, but still escalation. US and China of lately have been into a sort of trade war again, and again there is a downward trajectory, but it looks like pretty much controlled. But what is happening is a lot of these economies, they're becoming very protectionist. They're talking about putting tariffs on the imports and exports, and this is something which is worrisome for Europe as well. So that's why we need to diversify and come up with strategies which can give a better idea also. Now, what's coming next? So we have US elections coming next, and that is something which is really important. So we have seen stock markets during the presidential elections. We have seen S&P 500 performance on during the calendar year when the elections happen. S&P 500 has delivered at least 8 to 9% on an average, and I'm giving you data since 1960s whenever the elections have happened. So if you see, on an average around 7 to 8% returns have been generated in S&P, and that is how high it goes. So US elections is going to be a very very key factor. And while we are looking at the key issues, obviously we have all heard that how Biden has taken an exit from this, and the most established candidate at this point of time is Kamala Harris. And just to see a basic difference between the stands about taxes and tariffs and defense between Biden and Trump, This is something which we have observed, that when it comes to healthcare sector, the Democrats, they have been trying to build the Affordable Care Act, and President Trump has always tried to remove the Affordable Care Act, and that's what he did when he became the president. And if you talk about regulations again, when it comes to areas like financial services, technology, Republicans led by Donald Trump, they don't believe in putting too much regulation. In fact, they reduce this. But then Democrats, they always heighten the regulations on energy, tech, and financial services. That is why mostly it has been observed that during Republicans, the stock markets have soared higher. And we saw this in 2016, 2020, that how entire US market continued to go up. It was the upward slope for 4 years. So if Trump comes into power again, that might change the stock markets, and we might see a positive trajectory towards stocks as well. So again, there is a lot which is going on at the moment, and there are a lot of ifs and buts. But this is something which is going to be very important, and I'll show you something which we can do before the elections, and how we plan our elections, and how we plan our portfolios as well. So really quick, since we are talking about it, there are a lot of these strategies which we can look into, and one of them is sector rotation, is something which we have currently, which we have prepared. And sector rotation is all about looking at which are the areas where, as we say, Republicans can so which are these areas which can get benefited from Donald Trump coming into presidency. And we have prepared a report over here which gives you an idea that how do we capitalize on this sector rotation. So of lately, what has happened, small caps, which are smaller market value companies, if Donald Trump comes in, we might see more rate cuts, because that is what we realized happened in the last year also. Last time when Donald Trump was the president, he was very open and very vocal about that how the rates are supposed to be kept lower, and that did impact the economy as well. That's why we saw stock markets going higher and higher, because central bank was very careful before they raised interest rates in Trump era. So this is again possible, that if we are talking about Trump coming back, we might see a lower interest rate market. That's really good for stock markets, right? And that being said, a lower rate economy. So look at the macroeconomic outlook. I hope that everybody can see this flyer which I'm discussing right now. So over the first half of 2024, the large caps have dominated, and as we say, the magnificent seven, right? So these are the companies which are related to AI technology, which have given really good financial performance also, and in the area where interest rates are so high. So that is something which is again has been very remarkable. But now when you see the second half of the year, this is something which is shaping up to be a very dynamic period for US markets, and Fed is expected to cut rates in September. So now what is happening is, again, Trump has been getting higher polls in the presidential elections, and now people are talking about the great rotation. What is this great rotation as we speak? Because now all of a sudden the attention has shifted to the smaller market value companies. So if I were, I will show you a chart of the small cap market index, where you will see the phenomenal growth which has happened in the smaller market value companies. So there's an index which tracks the smaller market value companies. It's called US Small Cap 2000. And finally, it has started going up above their 2 year trading range. And we have seen the Fed chairman's testimony. And he said that there has been easing in the labor market, right? Which is an encouraging sign that rate cuts might happen. There is data which says that there could be a slowdown in hiring, and again, unemployment could go up. So that would again bring rates much down, and that could give boost to the small caps also, because this is something, maybe the current interest rates, if they're up for too long, it might hinder the economic growth. So that is another reason why the rates need to be cut, and it will benefit the smaller market value companies. So the companies with lower valuation, they have higher debt levels, And again, they stand to benefit when the central bank starts cutting rates, because all those companies which are smaller in market value, their debts are really higher. So if interest rate comes down, they will get more and more benefited. Now, obviously, as I said, there has not been a timeline, but most of the people, there is a 97 to 100% probability that in September there will be a rate cut. And now we are looking at the other part of this, which is US elections. Now, there is a growing likelihood that former president, which is Donald Trump, might win the US elections. And that is also very good for small cap stocks. Recently, there was an assassination attempt. I'm sure everybody saw that on television, that what has occurred and what has happened. So, this is something which has already happened. It has increased the winning polls of Donald Trump by a lot. And Joe Biden's debate performance has been not very up to the mark. Of course, now Kamala Harris is going to be stepping in into the race. And this is where we see that the small cap index have already started going up. And look at the sectors which have started benefiting here. So the small cap index, it went to 52-week high, and this was recently just last week. And I'll show you the actual chart that how much high it has gone. 11.5% in 5 days. Talk about the percentage return. Like, if you see small market value companies, they have gone up 11.5%. The index has gone up 11.5% in just 5 trading days. Now, this is the largest 5-day gap between S&P, which is the large cap index, versus the small cap index, and since 1986. So we are definitely looking at a very different record over here, right? Just look at this. From 10th to 19th July, the small cap index went up by 7%. And look at these groups. Financials especially went up by 11%. Utilities, telecom, industrials, real estate, all of the percent increase. Shares of financial and biotech firms make up significant portions of the small cap index, approximately 15% and 9%. So if you see the financial stocks here, the financial sector has gone up by 11% over this period. Now, even the smaller regional banks, they are recovering from the challenges which they have faced earlier. You see the biotech companies, you see the energy companies, and then most importantly to those people, I've got a lot of questions, people who are talking about the Bitcoin and the cryptos over here. So Bitcoin miners and other crypto companies, they have faced a lot of obstacles in going public in US. Now, if Trump administration comes again, that might pave the way for more support for the crypto firms. So there are gold mining companies, they also might perform well, because in a lower interest rate market, people might go towards investments in gold, right? And again, Wall Street has started understanding that maybe tech stocks are still very overvalued, and they might start more getting involved into lower market cap stocks. So there is this portfolio, and you guys can take a picture. Although anyone who requires this portfolio will, you can please have it. This will be sent it to you over WhatsApp or emails if you have registered your numbers. I will send this portfolio to the concerned person, and you, all of you, can see these companies. If you want, you can take a picture right now, or we can send it to you as well, whatever is easier. So these are a few companies: New Fortress Energy, Ligand Pharmaceuticals, Affirm Holdings, Halozyme Therapeutics, again Marathon Digital, Clean Spark, Osico Gold Royalties. And if you see their market cap in billions, $5 billion, $1 billion, $9 billion. These are again all smaller market value companies. But if you see their potential price appreciation right here, 45%, 18%, 22%, 35%, 14%, a lot of this. Again, please understand that everything I'm talking about here, it comes with a risk as well. These are smaller market value companies, and one thing which you need to know about smaller market value companies, that they tend to grow higher, but they're really volatile as well. And the sectors which we are looking at: integrated oil and gas, we are looking at pharmaceuticals, and we are looking at financial services as well. And there is an entire description given that why we expect these companies to perform well. And this is, guys, this is just going to be a part of your portfolio. Since you are talking about how to invest in the next half of 2024, this thing is going to be a smaller part of your portfolio. This sector rotation which has happened from large cap companies to smaller cap, and that is why it is important that we must talk about this. So off lately, what I did, I showed you that how the sector has rotated. Let me show you on the live platform that how small cap has actually performed in last few days. So currently you're looking at the live platform. If you see, gold prices have skyrocketed today, and it is almost, sorry, this is the small cap index right here. Gold prices have also gone up, and look at the small cap index. I'm showing you the price movement, and let me take you back to just last 5 days. Just be with me here. And this was 22nd July. Go a little bit back more. 11th July. Now see this from 11th July, and it will be easier if I make this line. All of you can see this. So this is from 11th July. It was at 2050 per unit from 11th July. Look at this rise. 11th, 12th, 16th, and now 17th. From 11th to 17th of July, from 2050, small cap index has gone to 2272. That is almost 10 to 11% growth. It did come down from 2270 to 2180, again went up to 2250. Currently it is at 2200. It has not gone back to the levels where it was 10 days ago. So small cap index has gone for a big breakout. And if I were to show you a sort of, let's say, last 1 year for small cap. So this is 2022, this is 2023 right here, and this is 2024. So this is year till date. From the beginning of the year, which was around 1932. Now look at this channel right here. This is how it has been moving. Gave a breakout here, it went down, and again if you see, like this, again a breakout, and now it's on the higher side. So you see there were subsequent breakouts, and this is where the gap was for small cap index. So we have seen two channels while the trades continue to happen, and the moment a lot of breakout happened. So a lot of traders have done breakout trading also over here, and that is where the consultants also come into the picture. So when you are here from your short term to mid term to long term investments, diversification is provided to you in the form of strategies and portfolios. And if you are willing to execute short term trades, even consultation is provided regarding that. But obviously, a lot of clients these days are diversifying. More money is being put into strategies and less money for speculation, of course, because of the risk factor. So this was one strategy, which was sector rotation. To share something really interesting with you, I'll show you something which off lately we did, and this was a very event based trade. And currently we are looking at further events, and one of them is the interest rates in Europe. Europe has already gone through a rate cut, right? Now in the coming next few months, if inflation gets under control, we might see Europe doing active rate cuts, because Germany is still under recession. If you see the German yield curve, it is inverted. The short-term bonds have a higher yield than the long-term bonds, and that only happens when a country is in recession, because the investors, they lose confidence. So now what we have observed, there is a product which is a basket of German bonds, and most of the time we have observed since 2008 that whenever the rate cuts in Europe, the price of that basket goes up, because in that basket we have all the long-term German bonds, and that basket is called Eurovoxel. And the strategy which we have discussed over here. So I'll just give you a real quick glance and look at this. So this is a basket which is called Eurobuxel. This is listed in Eurex exchange, and this is a basket of all the German bonds, which are long-term range, 24 to 35 years. Now, if you see the chart of the Eurobuxel price, somewhere it's around here. So it was higher around 220, and this was in 2021 when the rate increase started happening in 2021. And since 2021, from 220 euros, it has come down to 120 euros. Now, this is the most important part, guys, because you're already looking at this product which is linked to German economy, and this has already come down because massive rate increases happened to control inflation, and that brought Euro Buxel prices down. And this is not the first time this has happened. We have seen this back in 2008 before. That this is when, if you see this, we saw this in 2008. That in 2008 when the German bond yields were reduced, and when the interest rates were cut down due to recession, we saw the Euro Buxel prices, which is a basket of German bonds, the prices went up by 18.5%. And we have done enough regression analysis to understand right here that there is a negative correlation between these two products. And we have observed that a decline of 0.75% or a rate cut of 1.5% could increase the price of Euro Buxel by 14 or 29 or 30%. Increase in rates will bring the prices down. So, as I said, the strategies they always contain risk. But you see, normally what you do in your portfolios, you're going to put either some day trades and put stop losses, or sometimes you buy, hold stocks and leave it for years. Using a strategic approach, especially related to a specific economy and specific interest rates, it really diversifies your portfolio. It tells you that if there is a proper research, it gives you an idea that okay, if in the next 6 months we are expecting a rate cut, cutting that rate is going to impact which product, especially the bonds. Now, to buy bonds, you need to have a minimum order ticket, but to buy a basket of bonds in a form of a future contract, all you need is a derivative based platform and you can take an exposure. Try to make money on the capital growth. Obviously, if interest rates do not go down and it starts going higher, you might make a loss as well. And that is why we put all the four scenarios, all the two scenarios there, which can allow you to see that what could happen. Now, the same thing which I showed you, I will show you on the chart as well. And this is something which you can see on the live chart, that what I am telling you regarding Euro Buxel as a product. So, guys, this is also a very, very different strategy, and you will not see a lot of people talking about this. But the relationship between German bonds and the interest rates, it is not a secret. And let me show you the price chart right away. Euro Buxel moves 1 to 2 euros a day. So a lot of people who want to do speculation on that, they can do. People who want to take long-term price movement, they can also look at it. So currently, I'm showing you the price of Euro Buxel from say 2023, and if you see this, look where it used to be back in 2022, around 186. If you go further back to 2020, you will see that it used to be 100 and 220 euros. It has come down from here. And if you see again, if I were to draw this channel, look at the range where it was trading at. Again, right here, right? Let me just change this to a proper line figure so you can see this. Right, look at this when the range was broken. And now again, if I draw a channel over here, so currently this is what we see right here, right? Again, at a channel. So the moment this channel gives a breakout, so currently it is here, if it comes down at 124 or 125 euros, could execute a trade and wait what happens. But if there is a rate cut in Europe in the coming next few months, then we might see levels which we have not seen yet. Look at the levels, right? 182, or look at the levels like 162 or 145 or 145. Currently it is around 129 levels. The lowest it has gone as we speak right now is 118 euros, right? So guys, again, while you are doing your trades in gold and oil and in a lot of these products, like Euro Buxel, they're not really aware, like people are not really aware of this, that even these products, they move less, but they're linked to German economy, and you can always diversify. Everything I'm telling you is, it doesn't mean that you exhaust all your savings into these products. So the strategy which I told you, Euro Buxel, strategy which I told you about small cap or sector rotation where you can invest, that is one. I'm going to give you one more strategy, and this is going to be a very important strategy in terms of European markets. because this is something which is based on French elections as it has happened, and a very unlikely result has come out. So those who are following French elections would understand what I'm saying. But then I'll show you one strategy about French elections and one for those my investors who have been talking about. So some of you have messaged me on the chat talking about that. Are there any SIPs which can be done? Systematic investment portfolios, as we know. And yes, there is. And I'm showing you something which is a sort of a SIP portfolio, in which are the ETFs which you can create an SIP in. You don't have to take any leverage for that. You don't have to pay any holding cost on this. And I'll show you that how you can easily do this. So here, when we see from a SIP perspective, and I'm sharing a real quick portfolio, and if you need that portfolio for yourself, you can also just ask, and we'll send this to you. So I hope everybody can see this. This has been recently prepared, and this is a SIP portfolio. SIP is also called a systematic investment plan. So for those investors who do not like to put money at the same time, but they like to take a bit out of their savings and invest month on month on a specific date. Systematic investment plan is that. I have a lot of investors who most of the time take some money out and then buy S&P funds with that. And using an SIP can really help you to take advantage in those times when markets are coming down. Because if you keep buying systematically in a downward market, when the market goes up, you have a great average price. But the key is that never stop your SIPs. So that money which you take out systematically, you should always invest, and that investment can be done into ETFs. So what I'm currently trying to show you, there is a whole SIP portfolio which you can look at it. So let's say, for example, I'm showing you right away. Look at these products. These are 5 different ETFs. The first ETF which you're looking at is Invesco Triple Q Fund, and this is a direct exposure to Nasdaq. So all those investors who like to buy and sell Nasdaq or are interested in tech industries, this is a fund which you can create an SIP in. It becomes easier to trade with the ETF because index is more volatile than the fund is. So instead of, and the value of Nasdaq is $19,000 per unit. The price of this ETF is $490 one unit. So you can always buy ETFs. It is less volatile, plus it gives you the same exposure in the tech industries. Which, so I'll quickly show you also that what are the industries which Invesco Triple Q has. So these are the equity ETFs which I am showing it to you, and you can do SIPs in this. Just to give you an idea. So this is again completely dedicated to tech, and if you see the holdings which are in this: Microsoft, Apple, Nvidia, Amazon, Broadcom, Facebook, Tesla, Alphabet, Costco. 25% in this fund is given to semiconductors. 21% is given to internet, 15% is given to softwares, computers, and then a smaller percentage is given, 2 to 3% is given to beverages and telecommunications and commercial services. But majority of the exposure is in US market, very less in Netherlands. So if you see the 5-year return of this particular ETF, it has been around 21%. 1 month return has been around 7%. So if you see year till date, the ETF is up by 21.5% already. So what we have observed over here, this is a more of a tech fund, as we can see. So you can create an SIP. What you can do is, if you are committed to invest $5,000 every month into something, so your $5,000 can be segregated to these 4 different funds, but you must do this every month, and you decide the amount. I'm just giving you a benchmark figure, but you can put more, you can put less. It depends on how much you are saving. Every money, any amount can be invested into these ETFs. So that is why it gives you an idea. And guys, we need to plan our portfolios. Day trading, speculation is one way, but you must diversify, looking at what is coming next in the few months. And that is the whole idea about these sessions. So this is one ETF, followed by S&P 500 ETFs. Of course, index is much more volatile, but if you look at S&P 500 as a tier, it has hit fresh record, fresh high. And most of the corporate earnings last quarter it has come really well. Now, if you see the holdings in S&P 500, along with the tech companies, Microsoft, Apple, and Nvidia, Amazon, Facebook, Alphabet, there are companies like Berkshire Hathaway, Eli Lilly. And if you see the weightage or the industry analysis over here, just look at this. It is not a very tech based. I mean, the exposure is still in the US, but you see internet, semiconductors, softwares, computers, but then there is pharmaceuticals, there is retail, there is banks, there is insurance, there is healthcare products, and that is why it is much more diversified as compared to the Invesco Triple Q. So that's why you're putting in Invesco, which is more tech. Then you're putting in S&P 500 ETF, which has more industries to it, right? Then there is an India ETF, which is giving you exposure in Indian investments. As we have observed of lately, as per the new budget, uh, the short-term capital gain tax in India has raised to 20%. Now, if you want to take exposure in Indian equities, you can buy Indian ETFs here using the platform. You don't have to pay any taxes. You can buy and sell, and the ETF is denominated in dollars. So this is something which a lot of investors, I think, I'm sure, are going to pick now. So the India ETF is also available. And if you see the exposure of Indian equities, HDFC, Reliance, ICICI, Infosys, Larsen and Toubro, Tata Consultancy, ITC, Bharti Airtel, Axis, State Bank of India, all of this, 99% weightage is given to Indian equities, and the industries which we are looking at: banking, oil and gas, computers, automobiles, engineering, agriculture, pharmaceuticals, all of this. And if you see year till date, the ETF is already up by 10%. And this is in currently, which we are looking at, is more in dollar terms. Those investors who see gold going up, because gold has rallied in last few weeks, people can invest in gold funds as well. And most of the assets over here, 100% weightage is in gold. And year till date, gold is up by 15%. We have seen the ETF going higher by 15. And a lot of people can take advantage of this. People who are more interested, those investors who are more interested in bond, we have bond funds as well. And you can buy bond funds. Lot of US government bond funds are also available. So when we talk about overall understanding of SIPs, your money can be invested into different asset classes and different ETFs as well. So currently, I'm getting a few questions about how do we invest into. So ETF is one thing. I think there's a one question over here that ETF is a great idea. What about event-based investments? So event-based investments, if you're asking about, I'm assuming that, so US elections, as I told you, something where the sectors are going to be different. From large cap, a lot of movement is happening to small cap index. I just showed you the chart as well. Apart from that, recently French elections happened. Right now in French elections, we tried something really different. And before we end the session and take more questions, I would really like to show you something, because this is something which we have done for a lot of clients, and this is a strategy which has been talked about a lot. And just one second, I'll share this with you while more questions come in. So look at this strategy. This is called the French elections strategy, right? Aftermath, where we saw, so we came up first with the understanding of what has happened in French elections, right? Macron, he did go for an elections to get complete majority, but the results were very shocking. None of the parties who won were able to get full majority. So we came up with 3 4 different scenarios that what is expected to happen. But all the scenarios, the most likely scenario was that the government which comes in will not be a very pro business. So because they will talk about wage increases, and that was the idea. This could have a lot of ramifications on the investors as well, because as long as Emmanuel Macron was there, there was a pro-business government, and that's why we expected the French index to continue higher. But now it is expected that the commitment to the fiscal consolidation, it will be very weakening, and that could bring more and more credit pressures, and it could really affect. So the French index is expected to underperform given the political situation in France. So we are talking about shorting the French index, right? Because the lot of companies which are in the French index, they derive 20 to 50% of the revenue from France. Now you short that, but you buy a basket of shares of those companies which get most of the revenues from outside. So talk about Hermes or Louis Vuitton or Schneider. These companies generate around 10% revenues from France. They're less exposed to the domestic political instability. Louis Vuitton is an iconic brand to Fendi, Tiffany, Tagore, and Hermes. Again, the French luxury house, which is targeting both the affluent shoppers naturally, right? So again, all these companies, they are kind of insulated from inflation, because anybody who's buying Louis Vuitton is not looking at inflation. Anybody who's buying Hermes is not thinking about inflation. This is a luxury segment, so it protects you from inflation. But at the same time, these are the companies which are not bringing a lot of revenue within France, but mostly from outside. So you short sell the French index and you buy these three companies in equal values. Now, this is where the stats become more interesting. Had you done this in last 10 years, where you bought the three stocks in a basket and short sell French index, in last 10 years, only on two occasions you have made a loss. Rest on eight occasions, this strategy would show the profit. Now, this is for those people who always ask that, okay, I'm doing day trading, I have my long term portfolios, but I want to take advantage in the event based trading. So there, a way to do it in a more protective way. Of course, there is no such thing as guaranteed or risk free, but this way, what you do is you short sell the index you're expecting to come down, but in return, try to protect in case if the index goes up. You buy those companies which are not getting too much revenue from France and is a luxury segment and appeals to a different affluent class of investors. And then we backtest this 10 years ago that if somebody had shorted France and bought these three stocks in the equal value, out of 10 years, only two times they have seen the losses. Rest eight times, the basket has outperformed the French index. How about that? So these are the strategies, guys, which we keep coming up with. Now imagine you have a portfolio where you are into SIPs, you're into sector rotation, you're into French index, you're into Euro Buxel, and then you do your day trades, you put your stop losses, of course, take minimal leverage. But we have a lot more market neutral strategies than we speak. Right now, I haven't spoken about the price difference between Brent and WTI oil. That also come up with a lot of trading strategies, right? So a lot of these market neutral strategies, the idea is to reduce the impact of the volatility on your portfolio, and you can really easily execute this by using the online platforms. So this is not something for which you need a fund manager. You need a consultant to understand, and consultant is who we provide. And as I said, that after attending this session, any one of you, each one of you, you want to like to have access to these portfolios, you can have. That's absolutely yours. You want to have a one-on-one training session with me, understanding the platform, absolutely yes. And because you have joined the session, all of you have been uh, like you have this advantage to fix up a one-on-one appointment, and for as many sessions as you want. And this is going to be absolutely free of cost, because you have been the part of this session. Any amount of sessions you need in learning this platform will be conducted for you, no question asked. Just fix your time and tell us when and where. Online, Microsoft Teams, Zoom, or if you want to visit our office, we have our office in Abu Dhabi, which is in Al Reem Island. We have office in Dubai, which is in Emar Square downtown, and you can visit either of our offices and will be available. Just let us know at least a day or 2 day prior, and we can prepare a slot for you and give you a live understanding of how to trade in the market, how to execute these strategies, how to what sort of portfolio you can put into, and we are available for all sorts of questions. There's a question here. Are we going to get a copy of this deck? Definitely. I'll just send the PDF to you, and along with the portfolio and the strategies which you have, followed by, as I said, endless one-on-one sessions, as many as you guys want. So this is something which we have been doing for most of our webinar attendees. Anyone who attends our webinars, they take time out to understand this. We definitely want to sit with them again, and this is something which we do very actively, right? I think there's a question over here about the live account. Can we get the live? You can get the live account definitely. And by live account, if you mean a demo live account, yes, you can. So demo accounts are available with us. If you want to see the live pricing in the demo accounts, you can. Even there will be a plastic money in this. So if you want to buy or sell, you can. You want to buy or short sell and look how the prices move, you definitely can. So just ask the person who has been reaching you out, and they can give you the demo accounts as well. There's a question: how how can we sign up for the account? See, signing up account is very easy. There is a online application form which you have to fill, and account opening takes 2 days. So you can always fill the form, and we can definitely help you out in that. We can definitely train you also if you need to understand how to use the platform, and that is something which you'll be able to do. So opening live account is not a problem. It takes just 1 or 2 days to get it done. Another question over here. So guys, I'm just taking the question. If you keep writing, I'll just take the questions. I think we are almost done with the session. Is Century Financial regulated? Yes. So Century Financial as a company is regulated. We have a headquarter in Dubai, and we have office in Abu Dhabi. We are regulated from ESCA and Securities and Commodities Authority, and we have a Category 1 license with ESCA. Category 1 license is not something which is very easy to get, because the paid up capital required to obtain a Category 1 ESCA license is 30 million dirhams. So we have the Category 1 ESCA license. We also provide clients with the insurance protection, $2 million per client, which is already there. That being said, Century also has a wealth management firm in DIFC. So we are regulated with DFS as well, with Category 3 license. Again, the regulation and the trust factor is extremely important, I understand. So anybody who wants to understand and see the regulation bit, we are very open, very transparent. Just go to our website, go on the legal documentation, and you'll find everything what you need to do. Okay. Can we get a session one-on-one on technical analysis? Yes. I mean, I kept this session very basic so that it is available to everyone. But if you need a one-on-one session only on technicals or charts, you can definitely get this session. I'll personally sit with you, and we'll discuss about the candlestick patterns and supports and resistance and trends and Fibonacci's, and we can conduct a whole session only on technical analysis, definitely. Okay. All right. Then I think no more questions over here. But guys, we keep doing these sessions every week. In fact, next month again, we are going to have this series of these webinars, and you can always attend any one you want. Until then, if you need a one-on-one session with us to understand the platform, we are definitely available, whichever medium is convenient to you. And we'll send you the copy of these portfolios which we have discussed. I'll send you the copy of this presentation. You can always have a look at it. And we'll definitely hoping that you would drop by our offices and meet us in person. And once again, thank you so much for your time. My name is Yogesh, and hope to see all of you soon. And let's have another session next week on a very different topic, on understanding something different, and keeping ourselves informed about the financial markets. So once again, thank you so much, and you have a good night, and I'll see you soon.